Today we are going to talk about another unlisted stock that is undervalued. It operates in a sector which boomed in last 3 4 years, but in last 8 9 months it's seeing a downtrend. But however, the future outlook looks incredible. Let's dive into it. So the stock I'm talking about here is Hindustan Engineering and Infrastructure Limited. The market cap here for Hindustan Engineering is 1,544 crores. And if you see the market cap of its listed peers is around 7 to 8 times of Hindustan Engineering. And the PE is just 7 for Hindustan Engineering while its peers are above 50. So the gap in valuation is quite high. So let's look at the balance sheet if there is something drastically different happening in this listed peers than Hindustan Engineering. Why is the valuation so high for these and not for Hindustan Engineering? So if you look from March 2022, the sales are increasing rapidly till March 2025 or 2024, and then again in last trailing 12 months it's going down. Same with the net profit margin, it started increasing till March 2024, and from there it went a little bit down in March 2025, and traveling 12 months it's down by one third. So this is for Titagarh rail system. Let's look at another peer, that is Jupiter Wagon. The story seems quite similar here also. In 2022 to 2024, it increased drastically. March 2024 to 2025, it is stagnant, and same with the profits also. And travel 12 month, it's dipped by around 25%. Same within profit also. We saw the P&L of the two listed peers, and now if we look at the Hindustan Engineering P&L, you will see the similar trend. So in 2022, the revenue was 943. It increased more than three times in 2025. Now it's 3,000. And if you look at profit after tax, it increased from 39 crores to 218 crores. So it increased around more than five times in 3 years. In 2026, as per we know, in last 12 months, it's the revenue has decreased, and so is the profit after tax. But I think it's the same with all the peers. And we will see later in the video why the revenue has been decreased in last traveling 12 months but has increased drastically in last 3 4 years. The only major difference we see is the PE ratio. So PB is 0.95, so you're paying less than what is the book value of the company, and the PE ratio is just 7, while the listed peers valuation is so high. This isn't just a railway company, it's a three-headed engine. First, their core is engineering division, which generates 87.5% of the sales. Second is the cash cow, the chemical division, that generates 11.5% of the revenue. They hold a monopoly, like 30% of domestic market share in sodium cyanide, and export 40% of their output in the chemical division. Third, it's a minor legacy jute division that do around 1% of the revenue. In the railway engineering component, they are heavy freight specialists with a capacity of to build around 8,400 wagons a year. And freight is nothing but goods carrier. So you have seen open carrier which carry coals, oil carriers, and different types of carriers are there. Open carriers, like there's nothing on the all sides of it. So they are a specialist on that, and they manufacture massive structural items uh, that actually make train works, like bogies. So it's a suspension and wheel set assembly that get added. So the heavy metal undercarriage framework that hold the wheels and support the train. And also they make couplers that connects two bogies together. You would have seen if you've taken a train or anywhere, they connect two bogies. So these unlisted companies do their financial result every year, but you can get to know more things with CRISIL reports, or some other analysis that is done on the company. So in March 2026, we have a CRISIL report. I'll add in the pin comment. So there we got to know like the traveling 12 months what is happening, and why why the order book of this company has decreased from 3600 to 1500 in March 2026. So I think this is the major cause of a lot of railway stocks. These the peers that have shown is going down because the railways not releasing order books because they don't have wheels. So they have no wheels, no wagon to be built on. So government has paused the tender in 2025, and because of that, the supply chain has been affected, and the order books has been went down. So, is this order crunch permanent? I don't think so. Looking at the Union Budget 2026-2027, the government just announced a record capital expenditure of 2.93 lakh crores for Indian Railway. This is the highest ever allocation, and most importantly, they announced a new 2,052-kilometer dedicated freight corridor linking Dankoni to Surat. So and marked around 1.2 lakh crore strictly for safety and track renewals, which HEIL is specialized in. So once this wheel supply chain catches up, this 2.93 lakh crore budget that is coming to these railway companies, that will definitely be a tailwind for them, and definitely can push the stock and their number up. So this is what we got from March 2026 CRISIL report, that that HEIL liquid cash and mutual fund grew from 340 crores in their financial filing of March 2025 to 450 plus crore, because one of the subsidiary of their sister company, so their sister company sold the subsidiary and closed the loans that was given by HEIL. So they have collected the loan, and because of that, their cash reserve had been increased, and the loan in the company is virtually zero. So we saw all the good things about the company. Let's look at few of the risks. So they are highly dependent on the raw materials like steel, and its chemical division is also dependent on different chemicals and the natural gas prices volatility. Another risk is they're heavily dependent. They do like they get contracts while bidding, and with that the margin do get affected because you have to bid lower. So that is one of the another risk, and this is trading in unlisted market. That's one of the major reason why it's so undervalued, while its peers are not, and they do not give any dividends. To wrap it up, what I feel is Hindustan Engineering and Industry is a sleeping giant. It dominates its chemical segment sector. It's crucial in freight supplier for Indian Railways. You are getting it as a massive discount to its peers because it being in unlisted market share, the current railway shortage, which is affecting all of its peers. But with the government's record capex that is coming, if wagon tenders resume and order books will, I feel, explode, this stock would be one of the beneficiary, and the stocks could soar. That is the one part. And if in future, like currently, I don't see any IPO plans anywhere, no talk about it. But if the talks start, if the IPO start again, if you compare this to its peers, the valuation gap is very high, and if it get closer and closer, once the IPO announced, so you can see a massive returns on the stock. So do let me know what do you think, when will this valuation gap closes, and with the coming capex in the Indian Railway, how would these stocks perform? And if you come till here, thank you for watching, and please do like, share, and watch other unlisted stock that are undervalued.